Welcome to Trading Lounge and the European Indices for Thursday the 13th of January, starting with the STOXX 50. I've been looking at this in two particular ways. One, that we have, a WXY here for wave 4, and then we can look at this as wave 1 to the upside, and then the 50-60% retracement level is here for that. And the other one is that we're looking at it as an A wave here, coming down here, and basically an A, B and C wave up here for the B wave, and then down for the C wave. Now the STOXX 50 and especially the FTSE had this pattern here as being more bullish than bearish. The US markets, if I can just bring that across, the S&P 500 here, we're going through the same thing here, but in this way we're looking at wave A here, ABC for the B over here, and then looking at 5 waves down here. Now there's a really good case for having 5 waves down here in the US markets, especially when you look at Apple, Tesla and Microsoft. You can count a very, very clear 5-wave structure to the downside here. In all cases, though, we were waiting for the market to come back to the 61.8% here, and then we'll just see if it would move down from that point, and we're looking at particular strategies for that. But I won't go into that here on the S&P because I've already done that, and you can look at the S&P video for that. But we went through the same scenario here with these markets as well. So we've been looking at it as a bullish count and a bearish count, and it all came down into how this market, if this market finds a really nice support on top of the 300 here, and that's the top of minor group 1, which is really significant in terms of the trading levels. Nice tested support here would send the market to the upside. We could also refine that as well, by the by, so we can look at these are minor levels here, so the next degree down in fractal terms is the sub-levels. So we can look at 430 here. Now you can see how it captures over here, and it's also the 61.8% mark here. So to get support, because in the minor group here, if you get support on the 300, the top of group 1, well, that separates the market being pulled down from this point. On the sub-level at number 3, it would support here, tested support here, would stop the market being pulled back to this number. So a classic trading levels pattern sitting on that level there would take it to the upside, and you know what pattern that looks like. So I'll just tuck that away, and we'd look for a pattern very basic like that. So if that was sitting on the level, tested and taking one of these highs out here, and it can drop below here as well, which is more common than it does that, but taking this high out and that high out would pull it from that point. You can also go in for the really short-term traders. We've got the 30 there. We had the 300 as the minor level, the 30 for the sub-level, and the micro level is 33. So all the 333 in that case. And then that would tell you that you're leaving the 330 at that point. Let's go in and have a closer look and the hourly chart here. So it's a little bit we're going okay here. We could count 5 waves to here. Maybe we could put 5 waves to here, but whichever way you want to look at this, we still end up with B wave here, and we also end up with quite a nice little structure here. It's all sort of together there, so we can look at it as 1 and 2 and 3 and 4 and 5. So we've got our 5 waves up there, and then we're taking this top out here. So that's sort of telling me that, well, taking that top out here, our plan was really to go long at that point, was to go short under here and long above here. So we've got this other little 30 in here, so that's that's important. So I think that we need to be looking to the long side, but once again, when we get to here, let's also look for a little classic trading levels pattern as well. I'm probably making it a little bit large here, dramatizing it, but you know the drill. So we can go long there on that. So now we're going to go to the tick chart and just investigate this a little bit further. So So I don't need a lot of that. We just really want this side over here. So let's just stay with it. So as it stays at this point, we're looking at, we don't need that. This is where we had it yesterday. And this is our 50-60% retracement level from that point. So we talked about being short here, and that can still be the case over here. Any breach of that would be absolutely fine. And we also talked about going long above here, but we brought that down to this particular space here. So you may or may not be long in this instance. Now, this move up through here is not looking that good. We could label, if it was going to be bullish, I mean, it looks like wave C's over here, by the way. I think I might even, look, we could put wave 1 here, and then pulling back for wave 2 here as an ABC pattern. And then we could put wave 1 up here. But I'm just sort of noticing a little 5-wave structure in here, which would make a little bit of more sense to me. So this one over here would really become, I'm just going to leave the old ones there for the while. This would become wave 3 in that regard, and this could be the A wave here, and ABC here for the B wave, and down for the C wave here for wave 4. I'm just having a bit of a guess at that point. We can see here that this move is in 3 waves, so being 3 waves based on that 5-wave move there, well, it could fail and come straight down from that point. This is where we want to get this 330 sort of operating here, because this looks like wave 1 and 2 here. So we're probably getting some sort of little impulse wave to the upside there. So we'll end up with a little classic trading levels pattern here, the arrival, the reaction. It reacted heavily here, it reacted less here, and it will react less over here as well for that. So you should be able to get that position to the upside there. So I'll just clean a few things off here that we don't need. I'll need those later. What else is over here we don't need? We don't need any of this. Just so I can do some drawings a little bit later on. Bear with me there. Don't even need these. So even if this was 5 waves, it's hard to get 5 waves out of it. We could go 1 and 2 here and down for 3 here, some sort of ABC for 4 here and down for 5. So it's doable. It makes it, yeah, anyway, that's all another story. So we're just talking about, well, the markets looks bullish. It's sitting on top of minor group 1 now, so we really want to sort of buy highs. You may be long already, as I mentioned. So really what we could do here, if this is the bottom of the C wave here, or even at 1 and 2 and 1 and 2 here, well, then we can put the stop under here. And because this little move here is 1, 2, 3, 4, 5, well, then really we can put the stop under here. So we can put the stop quite close at this point. And if I just copy that line over here, and we will put that over here for that. So that would be the long side. So this is the short side, and we can keep continuing to build on the long side here, come what may, so to speak. Okay, we're going to have a look at the FTSE now. And this is a monthly chart for the FTSE. So I'm thinking that we're in a massive bull market here for this, with all the indices actually. I know that sounds a bit weird with all the money printing and going on, but you know, this move up from the 2020 here, I'm seeing it. I'm really seeing it in the commodities market. So I know that we don't trade commodities in this particular video, but I think, not looking at all of them, but I think copper's a good one to have a look at, because and the other ones are all in the same sort of vein in a way. So we're in this massive commodity boom cycle that is just starting. So this is copper. The LME, so your London one's got the same sort of pattern here. So we can look at it as the A wave here, the B, C, D and E here, and then up for 1 here and back for 2 here, or up for 1 and back for 2 here. I'm still trying to resolve that. But it doesn't matter. I mean, that's wave 1 and that's wave 2, and then moving up higher through here. And I'm looking at the Australian market where I'm from is in the same thing. So looking at this as wave 1 to the upside and pulling back for wave 2 and then going into wave 3, that's how I see it. So while everybody's sort of freaking out and panicking, then I think that I think we're actually, in a bull market. I mean, we also have to remember here as well is that this move down through here is in 3 waves, so it's corrective. I've had this nice correction here. I mean, even if we had wave 4 sitting here, or does that mean we put wave 5 there and that's the top and we come crashing down from that point? But very shortly, going above this top here, that's going to make it all bullish at that point. It's going to force it to be bullish. It's going to force that to be corrective. I mean, at the moment, we could have it down for 1 and back for 2 and down for 1 and back for 2, but, it's really testing it there. So I think that this is where we are here. That's pretty exciting. And just go to the weekly chart to refine that. I need to do a little bit more work on this, but looking at, if I just go back to the monthly chart for a moment and just so we're on the same page. So this wave 1 up here and wave 2 is what we're looking for, and that's going to play out at the 8,000. So in the Fibonacci, using Fibonacci sequence as a price ratio, you've got 1,000, 2,000, 3,000, 5,000, and then 8,000, and then we go back to 1 again. So, but we use the power of 10, so 10, 20, 30, and so on. So there is a level. This line in here is just 50% between these 2 levels here. A bit of a Gann trick. Not that I'm a Gann trader that much, but learnt a little bit from the things that he never said. So I want to copy that, and we want to put that 8,000 there. So that brings us in here. So, I mean, it's just be normal to have a correction at the old high here, and I always call 8 a profit-taking number, and it took the wind out of the sail here. It will do it less so over here. But we need to be looking for 5 waves up there. So going to the weekly chart now. So just looking at this here, I'm not quite sure about this. I still need to pull this apart a little bit further, but in one way or another, we're looking for this wave 1 and 2 up here. That's what I reckon. And we'll be going up higher. And on the daily chart or 2-day chart here, just to have a clean palette, this is my bet account here, but I'm still working on it. 1 and 2 here, and it was a really sort of big cumbersome wave 2 here. And a very complicated one. And even over here, I'm just sort of puzzled about this little area here. I've been over it a few times, but we move down for 3 waves, we go up for 3 waves, we move down for 3 waves, we move up for 3 waves, we move down. So it's really like a triangle pattern in here, an A, B, C, D, and E here for a wave 2. So that's a bit unusual. But normally wave 2 has got a very simple correction in it, but this one is complex. This one is complex. Even up here with this one here, this is, I was looking at this as a possible wave 4, but I think I'm looking at it the wrong way, and we need to look at it as wave 1 here with a WXY in here. I mean, these were all the wave 1s and 2s were complicated. So, yeah, I mean, I don't know. I still need to do a little bit of work and mull it all over a little bit, but I think it's interesting just to have a look at things like this, isn't it? It's sort of like, well, all right, well, okay, well, we'll see how we go, but always it's just one step at a time. Yeah. So I won't go on to the intraday with this just at the moment, but she's pushing up higher because I still need to resolve the count in here. I'm just going to go over to the DAX at the moment. So the DAX is a little bit more like the S&P. We've got a reasonably clean 5 waves down here for this. A bit cleaner than the stock 50 anyway, but at the same time, we can look at this as a WXY here for wave 4, and then look at this as wave 1. It's either that, or we've got it's either wave B or wave 1, and trying to figure it out. It has rallied back to its 61.8% roughly. So it could drop from here, and this is what we need to work out. And one of the ways that we're going to do that, this horizontal line here is just halfway between 2 medium levels here, just like we did on the FTSE, and you can see that it plays out really quite nicely there. But the number that we're working with is the 16,000. So let's just go in there and check on that. So yeah, we can have it as wave B up here or wave 1. So it just depends on how we look at it. But our plan was that we were going to use the 16,000 as support or resistance to set up the long trade or the short trade, of just keeping it as simple as possible. So you can see the top there is pretty much on that 61.8% mark there, and it has reacted. I can count 3 waves up there. If there was going to be 5 waves up there, then we could look at this as 1 and 2 in here and 3 here, and this would be wave 4 happening here, and we would still need wave 5 to come up here, and then we would have, if we got wave 5, then there would still be a little ABC coming in here before seeing wave 3 go to the upside. So any heavy trading would need to be done in this leg over here, and all this sort of stuff across here, and yada yada yada, all that. So yeah, let's go in further. So this is how we've had it here all this week anyway, whenever this has occurred. So we've got 1 and 2 and 3 and 4 and 5 here, just missing those labels, but that's okay. And then we've been counting this one up here. So I'd got the 1, the A, the B and the C wave here. Once again, it's a little bit dodgy in here, and we could also put this over here and do a few things. It doesn't matter which way we go, we've still got 5 waves in this little move here. So that means that wave B needs to go here. So it's very difficult to count 5 waves up here. It counts better as 3 waves. So once again, in a bit of a nutshell, we can refine things, but we could go long here and we can go short here. This has been pretty much the plan. But just remember, if you do go long here, then we'd have to look at this as wave 1 here and 2 here, and then wave 3 here and 4 here, and it's nice and complicated as a wave 4. And if it did move up, well then it'll probably just move up to here or somewhere like that, and then have an ABC correction back, and then make a move up it that way. So you need to be a little bit mindful of how you stack it on the long side. So let's just go in a little bit further. I don't know if I've updated the tick chart, but we'll just work through the dishes I left out last night, so to speak. Let's just get in some more data. 20 should be more than enough. Yep. Okay, so to me this is pretty clear here. It's not so much the 5 waves down there, but we've got 1 and 2 here and 3 here and 4 here, and we've got 5 up here. Now I know that's a little bit messy in here, and obviously there was stuff going on, but when you look at it, we've got 1 and 2 in here, and all of this will be the 3rd wave in here. So it'll be something like 1 here and 2 here and 3 here, ABC for 4 here and 5 here for this 3rd wave, 4th wave and the 5th wave here. So it's hard for me to count it any other way except 1, 2, 3, 4, 5 for the A wave and the B wave here. So I don't have 5 waves up here. I only have 3 waves up. So we just, it's really snaking along here, isn't it? So, it could typically be a wave 4 pattern. It could also be an A wave to here, a B wave to here, and some sort of C wave to this point here, and then we have 1, 2, 3, 4, 5 coming down here, and then some sort of correction, and then another 5, and falling out of bed here, So we could probably pick up a really small position on the breach of this here, but I wouldn't overdo it. If you normally trade 3 contracts, well then just trade 1, or something like that, and just keep building into it. But all that said, what we kind of want to do now, we can see that, it's not that obvious, but we're kind of now just sort of building in. If I take the top there, this was high, they're all sort of, except for these little highs here, these are sort of getting lower and lower in here. It's sort of diminishing into a point. It's not a very good pattern, but just to get that sort of, understand that point there. So normally when they work in like this, then they'll break out. So you've got to kind of not fall asleep within all of this. So what I wanted to talk about, first of all, on the upside here, it's 16,000 roughly here. Then we've got 10, 20 and 30 here. So that's the top of group 1, the 30. So you could go long above here with the little classic trading levels pattern. I don't know how much drawing space I could put on here, but basically the first high above the level now and this one. And the same to the downside as well. This is at the 65 here. So with the 65, we can go to the 80 here, and the 72 in here. That's all of group 2, okay? That supports the market while this group 1 and group 2 here, they support the market while it's swinging at 16. Support on top of this. So this would have been a little setup here. So we had the first high above the level, we'd go along above that, and then the second one would go along above that, but it just dropped at that point. This is the first high, that's the first high. So I would, I would use those as reference points and then try to get in a bit later. So it keeps you safe, and that's what you need to do over here. And the safe trade here, of course, is the group 2 here. The group 2 here, if this becomes the resistance, then you know it's leaving this number to the downside. That's as simple and as practical as I can get it. So I'm just going to leave it at that. So best not to be fixed on being long, best not to be fixed on being short, because your ego will get you into trouble. So stay flexible, stay with the evidence, work the trade setups, and less is more, and build the trade slowly. Because once it starts trending out of this, this move across here is the accumulation process. So the distribution process, be it up or be it down, you could take the length of this sideways unit for unit and extend that to the upside, square it to the upside or square it to the downside. Alrighty, thanks for tuning in. Cheers.